Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Monday edition. A little nervous Monday out there for the tech sector. We'll talk about some of the factors pushing the tech sector down, maybe even more going forward from here. I didn't get a chance to go through all my emails, so if you guys have something that you want addressed particularly today, type it in the chat. Happy to address those, and good to see our regular crew out here. We got Ricardo, options trading merchant. We got Texas, Kansas, Atlanta. We got two from Kansas in here. Good to see you, Jimmy. Good to see you, Tom. Katut, Sid, Daryl, Joachim, Skilled Stocksman, Tibor. Good to see you as well as Tom Messina. So good to see everybody. Here is, real briefly, topic for the day. Here come the downgrades. So before we dive into the downgrade list and kind of who was hit by that, years ago, I used to be glued to this announcement. So I would come in every day. This is the old trading floor days back in the late 90s. And so I would come in and I would immediately go and look at any site that was giving upgrades and downgrade information. A lot of times it was on CNBC on the TV, but you know, CNBC is generally lagging anyway. So I would go and find these websites that would give me upgrades and downgrades. And what that is analysts cover, meaning they monitor and observe and report on different companies. And they'll issue an upgrade if they think it's going to go up. They issue downgrade if they think it's going to be going down. And I used to always think, man, that's the elephant, right? If I could just ride when Goldman Sachs upgrades stock XYZ, all I have to do is buy stock XYZ. So I tried to trade that for a little bit because it seemed just too easy. And of course it was. What I learned was when I think one of them, I have some great screenshots when I originally built a lot of the OTA content many years ago. I included some of those in the class. And one of those screenshots was, I want to say it was Piper Jaffray. I think it was Piper Jaffray was the name of the firm. He issued a big upgrade on a stock. Okay. It should be going up today, right? So I'm there day trading. I hit that buy button, buy 1,000 shares, and I think, okay, it should be easy money. It's going to just run up all day. Well, it had already gapped up on the news. So what happened is Piper Jaffray issues this upgrade, tells it to the whole world, and instead of offering his sell price at, let's say, $10, he jumps his sell price up to $14. All of a sudden, you see the price of XYZ stock jump to $14. And who's out there selling all day long? Back in the day, you could actually see a market maker's identity. So I could see Goldman Sachs and JP Morgan and Morgan Stanley. I could see all of them, and you could tell when they were selling. And more often than not, when I got an upgrade, they were the ones selling. And when they issued downgrades, they were the one buying. So I say that before I even dive into this because I think it's important when you look at what happened today. There were several downgrades that came through for some major names out there. So let me start off with some of the bigger names, and then we'll go. It's a trap. That's right, Ricardo. General Akbar. It's a trap. It's a trap. It is. It is just, it's like chess, but most people don't know what the chess pieces do. In this case, the analysts are certainly something we should pay attention to. Now, let's look at the charts. First off was Google. So UBS, a pretty big firm out there, downgraded this one from a buy to a hold. So that's a pretty big step down. Now, you notice we've had this line drawn on this chart for some time, at least the last couple of weeks, this lower demand zone right in between 115 and 118. So I'm looking at this one, and as I see UBS, which is not a small firm, right? They're a pretty large global powerhouse. If they're issuing a downgrade, telling everybody out there to do what? What are they telling everyone to do? If they said it's going from a buy to a hold, they're telling you that the future doesn't look so good for it. Essentially, they're saying, sell it, right? Get out. And they didn't say sell, they said hold. And what that means is it creates all this fear. People are unloading their positions in Google. Now, do I think Google is a bit overbought? Well, I mean, it did go from $80 to almost $130 since November. So it's still a pretty good run. But I would argue that this area is a pretty decent point to potentially be buying at, right? It was an area back here where I thought we'd stall. We broke through it, and what was supply now becomes demand. So looking at this downgrade by UBS, they're saying get out of your Google. I would argue that this is probably a decent place to buy if it gets a little bit lower. Right now we're at 119 on Google, is down 3% on that downgrade today. But I'd be looking at this, 115 level. If I can get some juicy premium for the next week or so, I might do that. I didn't get a chance to look at the premium on Google today, but why not? I mean, I'm okay buying Google into the uptrend. I look at all the different things Google is doing. I think that there is a bright future for Google as well as Amazon. So this was the first one that got downgraded today by UBS, and I thought, well, okay, well, that's a little bit, timing might be a little bit off. Usually these guys are wrong. So when they issue upgrades, it's usually as something is peaked. And when they issue downgrades, it's usually right as something is about to bottom out. That was just one. Now, you may be asking, where do you find these things? Where do you find upgrades and downgrades? Just go into any browser and type in upgrades and downgrades. I'll do that for you right now. And there's dozens of sites, but briefing.com used to be a really good one. You have Market Watch. I think you can get some over at Bar Chart as well. Here, I'll just click on the Market Watch one. I don't really have a particular favorite. So you'll see reiterates, which is mean they're reinforcing their previous reiterates and maintain are pretty much the same thing. You have downgrades, you have upgrades as well, which you'll see some upgrades should be in here. Oh, mostly downgrades today. At the very top of this, you can actually click on the headers and it will sort by the category there. So anyway, I will leave it at that, and you guys can go look at your upgrades and downgrades on a regular basis. I look at it actually every day. So it's one of those things is I just like to glance at it and see if I recognize any of the big names. So Google, obviously one of the biggest ones in there. However, today, the real story was Tesla, right? So Google got hit 3% down today. Tesla, 6% drop today. Now, I personally think Tesla is long overdue for a pullback. I'm very bullish on Tesla going forward, but I think that it's definitely due for a pullback. Now, the question for me isn't, oh, I should dump my Tesla because it's going to go to zero. It's a question of where on this chart do I feel comfortable possibly buying back into Tesla? My Tesla shares are gone. I sold those ones. They got taken away from me with some call options I sold. But Tesla was downgraded by two firms today. Deutsche Bank, which, okay, who knows if they trust Deutsche Bank, and also another one called DZ Bank. So this was the main catalyst for your sell-off today of over 6% on Tesla. My guess is it'll probably continue to drop. I'll ask you guys, if you were looking to buy Tesla, where on this chart would you look to buy? I mean, there's so many different possible points, right? You could say, I'm going to put just a red line, not even a zone. I'm just going to put a red line at some of the obvious ones in my mind. There's one, which would be right around 234.80. There's your second one right around 224. And then really, for me, it gets tough after that, but all the way down to like 193. My favorite, and again, we all have different ways of perceiving supply zones or demand zones. My favorite on this chart, at least for right now, is going to be the 224. So I like that 224 because it's going to close that gap, but also go back to this one of the biggest green candles on here. The origin of this really big run up was at 224. So Dave says 200. Thomason says lower. Okay, I can see the 200 mark. And this is one of those situations where it's 200. Got quite a few lines on here. 200, 198. Yeah, I like the 198. I like what the origins of gaps. That's kind of a magnet for me anyway when I'm looking at setting up trades. So out of all of these, I will look at the 224s tomorrow and see if that is appealing, if there's enough premium, and see if the panic here does continue, right? If people do freak out about this or some other firm issues a downgrade, you could see it slip even further. But I'm okay owning Google or Tesla for the long haul, so I want to go counter trend these downgrades that came in from DB and DZ Bank today on Tesla. Now, there will come in waves downgrades, meaning it seems like everything is fine and calm. During a bull market, everyone's issuing upgrades because you don't want to look stupid issuing a downgrade during a bull market, right? Just a bad reputation. So at this point, I think that these downgrades that are being issued are designed to cause people to sell their shares so the price drops so they can buy back in at a lower price. Mark says, what about the gaps between 220 and 224? So you're talking right here, this little tiny gap. That's certainly one. You're talking right there, right? The 221.31, basically the closing price of the June 6th candle. I'm okay with all of those, honestly. Really, everyone here, I could make an argument for each one. The weakest, I would say, is this 234 mark. So I'll get rid of that one. It's too close anyway. Let's let the fear go, build up a little bit. I personally like the 224 just because it's what caused this big spike up was buy orders. All right, so there was an imbalance there between buyers and sellers. Fine, I'll use that to my advantage, and I'll set a stop loss down below those levels and call it a day. If we do get to that level, one thing I always like to look at is just from curiosity perspective would be how much of a retracement that would be. No, it's not really a significant number. I was hoping that the 224 mark would have lined up with one of the more popular numbers, but it doesn't. No. Although whoever said the 200 mark, that's a 61% retracement off the most recent high. So that's confluence there where you have these Fibonacci lines line up with an existing demand zone or supply zone. It adds a little bit more value to that trade. But so 200 looks pretty good. I have short puts at 230 for this Friday on Tesla. 230? I think when did you open them? Earlier today? You're probably doing pretty darn good on that one. I think you'll get there. I think 230 is in play. I mean, 230 from current levels. And remember, this was issued today. So 230 would be another drop of only 4%. I think it's easy. It's already done another 0.33 in after our session, so I think you'll get there by Friday. I mean, I personally, if you bought the puts, I wouldn't hold through expiration. The decay is going to happen so rapidly in this last bit. There you go. Tom says, Tesla's making its long descent from 1200 PE to below 20 like the other tech companies that are completely dependent on auto sales. I disagree with that just because I wouldn't call them an auto company. I agree with Don Fran, who says they're not an auto company, they're a technology company. Yeah, majority of it is going to be the vehicle, but I think there's so many other facets to their business that it puts them in a technology category. So I don't see the PE dropping to 20. Maybe in 20 years, but I think you'll still have a relatively high PE ratio for Tesla. But that's just opinion. You know, we can all agree to disagree on different metrics with regards to Tesla. At some point over the course of time, my guess is they'll probably spin off parts of Tesla and have Tesla batteries, Tesla solar, and make all these different sub companies. Right now, you have a bunch of them all wrapped up into one. So, I think Tesla's going to keep a high PE ratio. Now, 1200 might be just a little too high. Plus, they predict Tesla will have good earnings this quarter. Well, I never trust earnings, right? 90% of revenues, 90% of profit is auto. Okay. I'd like to see the agreements that they did with Ford and with, I think Rivian also said they're going to be using Tesla's charging stations. And I wonder if there's any sort of royalty payments or to use that system as well. They'll keep growing. They're also one of the number one selling vehicles out there as well, Tom. So they're doing pretty darn good. But yeah, I don't see the PE getting to 20. Let's go. Let's go to. I won't pull out the. Let's look at it real quick. So if it goes to a PE of 20, what would that be? Let's go finance. Oh, I guess I can just do it right here. Let's go to the last earnings statement. And they earn 85 cents per share. So you go 85 times 20. You're saying Tesla's going to get to 17 bucks. I will absolutely take that bet. It is not going to get to 17 bucks. Not anywhere in the near future. Yeah. I thought it was Rivian. I know Rivian, Ford, and then GM. I could have sworn I said something that said Rivian, which I thought was real interesting. It makes sense for Rivian, right? They just got to worry about building the cars. Let's not worry about setting up a whole charging distribution network across the U.S. So that's a real smart move on Rivian's part. I think Ford and GM may have been able to do it, but just join Tesla. I think it makes, for the whole auto industry, it makes sense, right? You could be like Apple, who has all these proprietary plugs for their Macs and phones, and that's why I hate Apple. It's always something proprietary. If every company in computers used the exact same cables, it would be so much better. And we're getting there. Right, you got USB-C now, which is great, but the lightning cable, that was just Apple. Only Apple used that one. Everything else got it. So if we get the charging stations all on one type, it benefits the whole industry. They can focus more on their cars, they'll have better profits, etc. Ford and GM. All right. So one other one I saw was a pretty interesting earnings or a downgrade today, and sometimes they're legitimate. It's usually based off an earnings call, but FibroGen. Right. So here's FibroGen today, who got effed badly. This, again, is why I do not trade biotechs or pharmaceuticals. So FibroGen got downgraded by like 5 different firms today. And you'll notice their announcement, FibroGen shares after trial misses preliminary endpoint. So they didn't make their clinical trial, and the stock is down 83%. Now, I've mentioned this many, many times. I don't trade biotechs or pharmaceuticals, but if you do trade biotechs and pharmaceuticals, you should be in the big diversified, your Pfizer, your Eli Lilly, companies that have hundreds of products. I don't know FGen, but my guess is they probably had one product, and they missed their trial. This thing will probably go to zero. So this is why I don't touch pharmaceuticals. It was at $16 yesterday, at $2.67 right now. This makes sense to downgrade. Right, all these firms that were downgrading it today, now they look good. Oh, we downgraded it. See, yeah, you downgraded after the report came out that they missed, and of course now you look like you're a genius. Okay, let's see. Do I have questions? I have a couple different things I wanted to cover for the next few shows. So I'm going to read through some topics here, and you guys let me know which one of these sound the best. Rich, thank you for sending this one in. He wanted to remind me of possible topics for the show. So if I were to do one this week, and I'm ridiculously slammed this week, as you guys know, I'm doing that webinar for bar chart on Wednesday. I would encourage you to check that one out and register for that. And again, if you have anybody that you know that might be interested in cryptos, I would encourage you to go to bar chart to check it out. I also wrote an article. So there's the new article I wrote for bar chart as well. That's how BlackRock can push Bitcoin to $45,000 by August. I'm hoping that Big Eb is here because I know Big Eb is long on Bitcoin as I am, and I really think that this could happen. I think the Bitcoin ETF is going to go through. I think BlackRock is going to get it. I think there'll be two of them that happen at the same time. Otherwise, the SEC would be under great scrutiny for preferential treatment for BlackRock. So they'll probably have two, but BlackRock will be the king for sure, and they're going to have to buy all this Bitcoin. So if you're interested in kind of how that's all going to work, read this article I wrote for barchart.com. I just posted there in the chat as well. And let's go to the Learn section here, and I'll post another link to the upcoming webinar. It is limited space. I did a test this morning. I didn't realize that there is they always say, oh, it's limited seating. No, there is actually limited. It's at 1,000 is their limit for the room. So here is the webinar for Wednesday. That's going to be at 10 a.m. Pacific. So I know many of you probably have to work, have jobs. I understand if you can't make that one, but you can also watch the archives later on at barchart.com. But if you want to join that one and send in your questions, your comments, and it's really a high level as to what's crypto all about, why is it important, what does the future hold, what are the risks, and of course, there's good and bad to crypto for sure. So if you're someone who's new, want to learn a little bit more, or have someone who would like to learn more, point them to that webinar. Okay, I think that's what I had to get to. Wow, 18 minutes in? Whew. No, we're not done. Don't worry. Let's go to our top 7 markets and run through just to see what happened out there on our Monday session. Only thing I did today is I sold some calls on some of my silver as well. I have one more position that I need to sell some calls on, but I kind of waited. I thought it might rally up a little bit more and maybe give me a little bit more premium on this upcoming move. So let's start at the bottom. Here's your B to the T to the C Bitcoin. A little bit of a pullback, although over the weekend, you don't really get to see this. So notice this is the futures chart. And you can see on Friday, Bitcoin hit a high of 31,655. But if you go to the spot price of Bitcoin, which is right, I'll get alphabetical. Here's the spot price of Bitcoin. It actually hit, it was like almost to 32 on one of the charts I was looking at over the weekend. Binance had it close to 32,000. But you see we have those 2 extra days of trading because it's open 24/7 for the spot market. Now drifting down just a little btle certainly due for a pullback. The question is, does this level that we just bounced off of, does that one hold? So let me draw a little yellow box around this bad boy right here. That is the most immediate demand zone, which it literally hit today. I can bring up the intraday chart so you guys can see that one, but it came right down to it earlier today, right around 10 o'clock my time, bounced off of it, and has now been climbing. So we'll see if this can actually kind of maintain its support right at 30,000. I think it actually will, just based off what's going on with the Bitcoin ETF landscape. I spent a lot of time writing that article for Bar Chart, and when you look behind the curtain, it's very different to buy stock versus buy Bitcoin. Bitcoin, you have to find the liquidity. If you want to buy stock, you can just go to an exchange, and there's plenty of liquidity. There's tons of millions and millions of shares out there. It's just how much do you want, and you can buy it. With Bitcoin, you have a very unique scenario there, and I think that 30,000 level will probably hold. And again, my target here is going to be 45,000 for Bitcoin by the end of this year. And if you look at the daily, main reason I said 45 is if you look up here, it's actually right here is the beginning of this overhead supply zone that goes all the way back into April of 2022. Immediate retest. Yeah, I mean, it's a quick one too, right? It had that breakout, which is obviously a pretty good demand zone if it has a move like that. Of course, this was news driven. And then you have that little pullback. So again, this week to me is going to be very interesting to see how long this will stay above 30. It's funny, when you look at the Twitter world, you have so many experts on crypto, and they're all saying, oh, this is the last time it'll ever go below 30,000. Okay, I disagree. It could certainly go back below 30,000. But right now, there's a lot of positive factors, particularly because Gensler said it's a commodity, not worried about it. Let's see. Skills Action says the downgrade could just be a bear trap. Always be careful. Never trust the big. Yep, I'd never trust an analyst with their recommendation. We had. I know many of you. I've mentioned this story before, but when I was in college, I ran a financial management club. It didn't do a lot of things, so that the first year I was in, it was kind of boring. Second year, some of my friends and I just took over. I said, I'll be the president, and we started bringing in experts that we had through connections and different friends. Hey, what possibilities are there out there for us as a finance graduate, coming out of college with a finance degree? What sort of things are there out there for us? What do we have to look forward to? So we had CEOs and CFOs and COOs, like some nice prominent people. And then the one that I don't even remember any of those other people, honestly. I remember one, and it was a guy who was a trader for Bank of America. And he, again, rides in his Ferrari. He's got his Prada clothes on. He's just decked to the nines and starts talking about how much money he can make. So I've told you that story already, but there was other piece here I haven't mentioned. And he would talk about how the trading desk would bow down or would do things based off of what other departments wanted. So for example, let's say I've got a client, and I've got a client wants to buy 500,000, wants to buy $5 million worth of Intel stock. Right? A lot of times when people buy that big, they don't specify a price. They just say, I want to buy $5 million worth. So he would say that they would ask the client, what price would you like? And say, well, what price is it trading at? And it's like, oh, it's trading at $30. Okay, buy me $5 million worth at $30. So from that point forward, the institutions are on the hook to buy him $5 million worth of Intel at $30. He said what they would do is they would go to the analyst department and say, hey, we need you to issue a downgrade on Intel, and come up with the whole story of why, maybe missed earnings, and especially for big orders. And that would cause the price to gap down 3, 4, 5%. They'd buy the $5 million worth of shares for the customer at, let's say, 28, 27, 26, somewhere down there. And they'd still charge the customer $30 per share because that's what they wanted. So all that profit difference becomes the firm. So they would use these analysts to manipulate the markets in their favor. And ever since then, I'm like, I don't trust this at all. Not at all. I'll never believe what an analyst says. I always think there's an agenda. That same guy who worked for Bank of America, he would tell us that there was a trade sheet when he came in the morning. And on that trade sheet, he's basically a sales guy. So brokers are salespeople. And he would have a line item and it'd say Dell Computers. And it would say a perfect paragraph. We think you should buy Dell Computers, blah, 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 for whatever reasons. And the reason they're looking for buyers is they were trying to sell their Dell position. So they needed price to move up. They got people to buy into it. They sold their shares to their customers, which is, that's, in my opinion, a conflict of interest. And they would be incentivized for, vacations or monetary bonuses if they sold certain amounts of those stocks on that list. Kind of a shady way to do things, but once you learn about the real world finance stuff, the less you trust it, and you realize it's just a giant money machine for the big firms that control the information. Anyway, I will stop. So that's Bitcoin. That was our worst performer. It shows up here 2.59% down, but the spot market is actually way better than that because this takes into consideration the big weekend drop. So in the last 24 hours, it's only down 0.9%, but over the weekend, you have a 2.59% drop for Bitcoin. Moving up that list, NASDAQ, which of course had Google and Tesla to hurt today. We had that little area of consolidation, wondering if that would hold. No, sir. It did not hold that little level right there. So let's get further out of there. This bolsters my argument for the corrective phase here for the NASDAQ, which I wrote about last week at Bar Chart. Today, big, ugly red candle. My eyeballs immediately start to jump down here to the origin of this gap, which is 14,500 on the triple Qs. More likely hit these lows right around 14,250. So that would be from current levels. Let me just put a horizontal line there so you guys can see it. Going from current levels to that downward line, you're looking at a corrective about 4%. No big deal, right? It dropped 4% to get to 14,250 on the triple Qs. Off the high, almost an 8% slide. And I think that's very doable, natural, and be good to have this market correct, 7, 8, maybe even 10%. But 7.8% looks like that target right there. I'll leave that line on there and see if it comes to fruition. That was your 7th place finisher. S&P right on the heels of that one, down 0.43%. And again, we've had these two lines here. I think 4,300 is going to be a pretty logical break point or target here. Off of the high for the S&P, getting down to 3,400 would be about a 4.4% slide off the high. From our current level, it's only a 1.7% slide. So we're pretty close to getting to that area of demand where I think you'll see that S&P 500 bounce. So as we get closer, I may be looking at buying some market outright or maybe even just selling some puts and collecting more premium. Dollar index, 0.1, right? So you look on Friday's session, actually Thursday and Friday, we had nice big pop to the upside, big moves up, looked great. Of course, that didn't really help the markets. Today, coming down just a little bit, and it's different because you had a red day today on the dollar and you had a red day on the equity indexes. So usually these are the inverse relationship, but I think the downgrade that happened on Google and Tesla kind of have a little bit of a broader, more powerful ripple effect through the indexes. Your 10-year, not too big of a deal here, just still traversing sideways. Silver or bronze metal, Russell 2000. Long topping tail on this bad boy. Lots of volatility, but at the end of the day, really didn't do much. It was only up 0.21% for the Russell futures. Second place is gold, up 0.22%. I had this level drawn as that kind of pullback point, 1920 on gold. We hit that level, well, just barely got to it on Friday, and now a slight move up. We'll see if we actually get back up to, let's say, 1970, which would be that previous supply zone. Before starting to drift back down. I don't think we're out of the woods yet with this negativity on gold, this downtrend that's been intact since mid-April. Still feels like it's just slowly drifting lower, so we'll have to see. I was talking about 223 for... I'll bring up Tesla in just a second. Let me get to number one. Crude oil. You had that great hammer formation right here on Friday. Not a lot of follow-through, unfortunately. So I was watching, thinking maybe oil would be a play today. Didn't really see anything that drew me into it. You can see the last time we had a really monstrous hammer back here. You had 3 days of just great up moves before giving some of it back. So that was your number one at 0.3% for crude oil, 69.37. There you go. Maybe Don's front running. Don's not front run. TSLA, 223. That was his target, 223. Yeah. 224 is mine, so we're pretty much spot on. He's looking basically right in this red or green candle here. Right, that's where I'm looking as well. He's going just a hair below me, which is actually, if we zoom in on this, he's using the tail. I'm using the real body. So basically, Don's going to there. One step up. The low of this candle was 223.01, which is why he's doing that. Now, let me ask you guys this, and I'm glad you brought that on. Thanks. When you say that there's a target at 223 versus 224, for me, it's never a specific, there's not like a line where you say, this is it, right? It's a zone. Now, if I were to zoom out a little bit on this Tesla, and let's say an hourly time frame. One sec, let me clean this up here so I don't get my lines confused. Okay, perfect. Let's go hourly. All right, so I'll do a 1 hour time frame. We'll go all the way back to that price chart. We'll take out extended hours trading, and now let's look back here. So this is why it's so important. This is that area that Don's talking about. And if you go to 223, you're really looking at the low of this candle right here. I don't know why it's not snapping. I wish it would snap, but it's right there. I said 224, which is just slightly higher. No big deal. The problem is this. if you use 223 as your entry point for Tesla, as your target, right, to buy into it, you're picking the very bottom end of that range. If I was to put a supply zone in here, and again, I don't draw it the same as how many of you may have learned, but my supply zone would look something like, come on, this snap mode's driving me crazy. Okay, my demand zone would look something like that, right? So somewhere within the confines of that yellow box is where I need to be looking to buy. And if you are someone who is aggressive, you're going to buy right as it comes in there. Right as it hits that line at 227, fine, I'm buying. But the problem with that is, if you're buying right at 227, price is falling. So you're now catching that falling knife. Is this demand zone here real? This demand zone goes back to Wednesday, June 7th and 8th. Is that demand zone real? Is it really going to hold? Well, you can buy at 227, and I can't fault you for that. You could also try to buy at 223, but that is literally the dead low of that range. So you're being so stingy, your odds of getting it are very, very low. And you probably won't get it because it'd have to turn literally at the dead bottom. So personally, I would look at this range and I would find somewhere in the middle of it. All right, let's put a horizontal line. Let's say right in the middle looks like somewhere right around 225. So 225, now you're in the middle of the zone. You can calculate your risk out, and the thing is, as Dave says here, my entry for demand depends on my stop loss and what I can afford to lose. Exactly. Good. I'm glad you said that, Dave. That's what it should be. So let's say I decided to buy at 225, the dead end of that zone. Okay, great. Now I can start to calculate my stop loss, which will probably be down at, let's say, 222. It gets to 222, I'm out. So I'm risking $3 a share. So if I can risk, $100, well, I can only buy 33 shares. So now I can discern my stop losses that way. But at least if you went 225, you're giving a little bit of room to wiggle. If you did the 223s, you're right at that bottom. You can have a much tighter stop loss. I mean, you can actually have it wider if you wanted to, but you're really trying to catch at the very last point. And to me, that's just a little harder to do. Not that it can't be done, but it's just harder to do. Either way, I think regardless of 223, 227, 225, 224, there's opportunity for Tesla as it gets down towards that demand zone. And I will be looking at that one as well. And maybe tomorrow we'll see if I can get some good premium. I'll look at selling some puts on that and capitalizing on the fear. But I think you're going to get a couple more days of fear. Notice we've got this unfilled gap right now, right? And it looks like it's going to traverse and try to close that gap. Might even get there by Wednesday. All right, what else I got? Check the news on Dish to make sure I understand the news, correct? Oh. I'll tell you, I'm not bullish on Dish at all. I'm actually bearish on Dish. I look at what Starlink is doing with Elon Musk. I did not see the news. Let me just check it here real quick. Dish Network operating Langer to resign. Okay. Operating chief to resign. Good for him. I'd leave that company too. Unless you're making a boatload of money with your stock options, I would say leave Dish. I think that's a dead breed. We've got satellites all over our houses. Why? Because that was cool back then. Years ago, having a little satellite was the way you got everything. Now it's high speed, fiber optic. If you are in remote areas, Starlink's probably gonna get you a much cheaper price. Just heard Coinbase is off the hook. Oh, really? With so I have Coinbase puts. Sorry. Yeah, I sold a bunch of puts last week on Coinbase, but I didn't see off the hook. I'll have to look. I don't see any news on that one, but it'd be great if they could get out from this SEC garbage. I'm bullish on Coinbase over the next year or so. I think that this is going to be an interesting battle with the SEC, but I think you're going to get a lot of companies supporting Coinbase, and government officials will start to turn on SEC. All right, so for tomorrow, let's go look at your Forex calendar here. I'm going to wrap things up. There's for Tuesday. You see some red factories over here. Well, red factories are for Canada predominantly. You see consumer price index numbers coming out. They're expected their inflation to drop as well from 0.7 to 0.4. The U.S., the one that I'm interested in, these two down here. They happen at 6 a.m., so it's 1 hour before the markets. Oh. Why did my time zone get changed? Hold on a second. My time zone got changed here. Because it's bizarre. Look, it says it's 1:58 p.m. Let me click the refresh. There we go. That looked weird. I'm looking forward to the Case-Shiller Composite 20 Home Price Index numbers. That's going to be coming out tomorrow. That's going to be 30 minutes before the markets open. And you have HPI data. Now, this one's real interesting because it could be the second time in a row we've seen a contraction in the Case-Shiller Composite 20 Home Price Index, which means home prices are falling. Last time we saw a decline below zero was going all the way back into 2012. Now, of course, you can see the 2008 decline. That's obviously severe. That was a whole mortgage crisis. I don't think we'll have that big of a pullback, but a decline here is going to hurt the economy, right? If the more this goes negative, the more likely you're going to start to see homeowners underwater on their mortgages, right? They especially those that are buying right now. I feel bad for anybody who's bought in the last 6 months because it's been pretty much down since middle of 2023 with regards to housing prices. So that Case-Shiller Composite 20 Home Price Index, I think is going to be could create a bit of a shock for the markets tomorrow. Remember, the more we see housing decline, the more GDP is going to decline, and that's a big platform for the Federal Reserve and their interest rate policy, which I did not check today. Let me real quickly look and see what the Fed Funds futures have done today. U.S. Supreme Court agreed to suspend litigation. Ooh, I got to go research that right after this one. Yeah, so everything's kind of stayed the same. There's a 76% probability that they're going to raise rates at the next meeting. I personally don't think that they're going to. I think you're going to see it stay the same. So watch over the next couple of weeks, right? Our next meeting is the 26th of July. So you got about a month from today to the next FOMC meeting. I am of the opinion that it's actually going to come out and stay the same. Of course, economic data is going to drive this. The Fed has said that they're going to raise again by the end of the year. So I think that they're going to just continue to wait because inflation's dropping. If the housing market takes a nosedive like that chart is showing you, let me go back to our Forex Factory Case-Shiller Composite 20 Home Price Index. This nosedive here is driven largely in part due to interest rates, right? You're seeing home values fall because people just can't qualify for loans that are now 7%, whereas back in 2020, 2001, you're talking 3% for the same loan. So much easier to get back then and much lower rates. This is choking out the housing market, and we'll see how bad this one actually ends up being. As far as earnings go, I don't recall anything really being significant on the earnings front. Let me real quickly bring that one up there for earnings for tomorrow. Oh, we had Carnival Cruise Lines. Let's bring up Carnival Cruise Lines. I think Linda was in that one. I hope you put a stop loss on. They got hit hard today, down 7.5. They beat earnings. Fell 7.59%. And it's funny because this 1382 line, we talked about that as being a stop loss on this bad boy. You might be getting real close to getting stopped out on Carnival Cruise Line. Otherwise, for earnings for tomorrow, here is your list for Tuesday. Walgreens Boots Alliance and Schnitzer Steel. That's pretty much it. Nothing really exciting there. And lastly, I mentioned that there was some topics that people had suggested, and I was going to give Rich a shout out because he sent in 5 topics, which I think is really nice. Thank you for that one, Rich. I appreciate that. And you guys let me know if any of these sound good or if there's something else that you want. You can always email me at TraderMerlin@gmail.com and say, hey, could you do a show on boom, boom, boom? And I will do my best to get to that. Obviously, I've got a million things going on right now, which I maybe in the next couple months I'll clue you into some of those major changes for me. But I have some big stuff I'm working on that I'll maybe rolling out here in the near future. So my time has become much more precious. Rich says, can you do one on personal finances? Another one would be credit cards, tips, and tricks. Number 3, he said PC specs and requirements for traders. How to estimate intrinsic value of a stock. And then the 5th one, he says, FinViz recommended filters for selecting great companies to invest in for the long run. So if any of those sound interesting to you, type in the chat and say, I'd like to hear that one. Or if you have one that you want to hear, type it in or email me at TraderMerlin@gmail.com. I do have a list put together, but he just emailed me to remind me. And Rich, thank you. I'm not avoiding them. I get so busy. Like today, I was working with Bar Chart on the webinar for Wednesday, and literally I just said, I have to go to do a show. Flipped over here and did it without having time to do a bunch of research on those topics or build something out for you. So, okay, so I definitely want to learn more about hedge funds. Yeah, you know what? I should get a panel discussion with Sam Evans and Corey Lane because they're both doing hedge funds. That'd be really interesting. Ins and outs. Of course, you know, they're going to be biased, right? Because they're both running hedge funds. And I think that ultimately they're going to be looking for investors. That's what hedge funds do. They want money to come in. But that may be an interesting topic. That'd be a good one. Let's see. Intrinsic value for stocks, PC specs. I like the intrinsic value, but I am discounted cash flow guy. Cool. All right. Cool. Laptop specifications for traders. Okay. Mike Mitch. I got a new guy in here. I haven't seen you, Mitch. The guy with 2 first names. Mike Mitch. Well, welcome, Mike. If you are new, hit that subscribe button. Because, we do the show every Monday through Friday at 2 p.m. Pacific. Intrinsic value on stocks would be cool. Okay, I see a bunch of people wanting intrinsic value on stocks. Alrighty then. Sounds like that might be one of our upcoming topics here. Cool, that's going to do it for me, guys. I'm going to bail. I got a bunch of stuff I got to take care of. I hope that you enjoyed today's show. Hope you learned something. If you're brand new, hit that like button or subscribe button. It'd be a 2-hour show. I meant, no, we got to keep it shorter than that, bud. We'll keep it much shorter. We'll do what? I could do it in 30 minutes. I love you and Corey on again to talk about hedge fund thing. Yeah, cool. Oh, I just haven't seen you, Mike. Sorry, not new. Thanks for being a regular then. FinViz filter for yellow boxes. That's one. I think you have to get a premium account. No worries, Mike. Be vocal. We got a good group here. Just keep it. No politics, no hate. Just keep it good, and we'll hopefully all learn to be better traders out of it. Yeah, Tom. I don't know if there's a FinViz. I know that you can with. There's a site called Stock Fetcher, which I've used in the past, and you could probably program it in. It all works with code. You could probably program in a way to filter out and find things that are consolidating sideways and make little yellow boxes on that one, but not that I know. Those are all just visual for me. All right, everybody, that's going to do it for the day. Hope you enjoyed it. Have a great day. Send in questions at TraderMerlin@gmail.com, and don't forget to register for the webinar that's on Wednesday with bar chart at 10 a.m. Pacific time, and the link is in the chat. You guys can find that one, and I will see you guys tomorrow. Take care.